Man, I cannot wait for today's video because we just got access to some of the most interesting and informative numbers to come out in a long time for the Toronto and GTA real estate market. That's right. In today's video, I'm going to go through the most recent TREB resale market report that was just released this morning, detailing all the major themes, numbers, and trends you should know with regards to the Toronto and GTA real estate market. We're going to cover the most major categories. Where are prices at? What's really happening with the market? I mean, we are in October. Is the market crashing? Is it resurging? I mean, you hear a bunch of different stuff. And in today's video, we're going to go through the numbers, give you the context you need to know, combine the quantitative and the qualitative, bring you the most accurate market report. Hello, everyone. As always, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. Welcome to another video. If you're new to the channel, my name is Sam, a Toronto real estate agent who actively works within the Toronto and GTA real estate market on the behalf of buyers and sellers. On this channel, we like to discuss all things having to do with the Toronto and GTA real estate market stats, market reports, buyer advice, seller advice, area analysis, condo reviews, and so much more. So if you find any of this content enjoyable or informative, feel free to subscribe, give a follow, or you can find my contact information in the description box if you have any further inquiry or are in need of professional service. What immediately jumped out to me when I was going through the report was the 44% increase in terms of listings. That's right, the total amount of homes that came onto the market for sale in September of 2023 was 16,250 or so. This represented, once again, you're not hearing this incorrectly, a 44% increase on a year-over-year basis, because in September of 2022, we only had 11,000 new listings that came onto the market. This is obviously across the entirety of the GTA. This is a humongous jump on a year-over-year basis. I haven't seen a figure this high for inventory increase in a long time. And furthermore, the 1 month number of 16,200 or so listings, new listings that came onto the market, not active inventory, but new inventory, is the highest figure we have seen since June of 2022, which helps me transition into the month-over-month figures as covered extensively on this channel. So far, year to date, 2023 has been supremely disappointing in terms of new inventory and listings. August, the month previous, we saw around 12,900 new listings. That was down 5% from the 13,000 figure we saw in July. And July itself was down 13% compared to June. So along with this 44% increase in new inventory on a year-over-year basis, we see a 25% increase on a month-over-month basis when we compare the total new listing figure in September to August. And trust me when I tell you, I saw this firsthand on the ground by every empirically verifiable metric. Let's start with my own business. I worked a lot more on the selling side in September than I had in August and July. In August and July, I was mainly working with buyers. In September, I did work with some buyers as well. Happy to say we bought some good properties, but my listings increased in September. So I saw it in my own business. I saw it within my brokerage. In every brokerage you go to, there is a wall of sales and there's a wall of listings. And in our brokerage, in my office, the wall with the listings, well, the whiteboard was running out of space and they had to keep adding and taping more and more paper onto the wall to account for the new listings that was coming onto the market. I saw it firsthand when assessing certain buildings for clients, buildings that I have an eye on, buildings I know really well in downtown, North York, Mississauga, Midtown. You know, I'm a Toronto and GTA condo enthusiast, so I always have my eye on the market. And a lot of buildings saw a huge jump in inventory. Same thing applies to freehold, whether it's detached, semis, or townhomes, certain areas and communities that I had my eye on that I know very well. A lot more properties came onto the market in a given street or in a given block. So yes, in this case, the numbers completely line up with what I'm seeing on the ground as a Toronto real estate agent. But this is where it gets even more interesting, because as we have this 44% increase for total inventory on a year-over-year basis, and I'll touch on why this is happening a little bit later. But as we have this, coinciding this, we saw in terms of total Toronto home sales and GTA home sales, a decline. That's right, a decline of 7% year over year. Sales are simply just going down. In September of 2023, we had a total of 4,600 sales, wherein in September of 2022, we were looking at nearly 5,000 sales, to be exact 4,990. I think if I recall correctly, the number is literally one short of 5,000 last year. It should be on the screen anyways. But unlike the inventory figures we were taking a look at, where the year-over-year increase was way more than the month-over-month increase, here the year-over-year decline in this case of 7% is less than the month-over-month decline, which is way more illustrative of what's happening. Let's take a look at the month-over-month numbers. Here we see that in August, sales were still pretty low, but they were in the 5,000s, around 5,290 or so. So on top of the 7% decline on a year-over-year basis, we see around a 12% decline on a month-over-month basis in terms of sales, and this continues the pattern of sales across the GTA and Toronto real estate market continuously and in successive fashion declining since really May of 2023. In May, we had 9,000 sales, which was up 19% from the month previous, and ever since May, for the most part, we have seen a month-over-month decline in sales, if not a decline, a barely holding water figure like we had in August, where sales were up 0.8%. But anyways, the point here is inventory has completely surged while Toronto home sales are continuing to drop. Why is this happening, and what does this mean for prices? Well, let me touch on the latter first, if that's not a confusing way of putting it. How have these trends impacted prices? Well, it seems as if not that much. I mean, let's take a look at the average price across the GTA, across all property types, across all areas. We see that year over year, prices are up 3%. That's right. We went from an average sold price of $1,086,000 to, in September of 2023, the average sold price of $1,119,000. This represented a 3% increase year over year, and the same 3% increase can be seen when we take a look at, once again, the month over month numbers, how September performed compared to August. This September average sold price represents an increase of 3.4% or so when we compare it to the August figure. And an average sold price in August across all property types was $1,082,000. And when we break it down by property type, not yet geographic location, but by property type, so looking at detached across all of the GTA, looking at the semi-detached property across the entirety of the GTA, same thing with condos and townhomes, all fronts, we see that on a month over month basis, average sold prices are up. Detached homes are up 1.7% month over month. Condos are up 0.25% month over month. Semi-detached homes were up 2.4% month over month. And townhomes were up barely 0.5%, around 0.6% month over month. So home prices are up, but really in reality, they're holding water, right? As we see, the increase is very modest, to say the least. I mean, in some instances, it's non-existent. 0.2% increase in average sold prices for condos on a month over month basis practically means if a couple of sales went another direction, it probably could have been down 0.2%. Who knows? So for the practical sense, for really, what actually matters on the ground, we can think of average home prices across the GTA as holding steady, not increasing substantially, although once again, in terms of literal figures, they are up, but in practice, not increasing and clearly not declining either. Now, of course, once again, I hope this goes without saying that I'm only talking about in the last 3 months. As you know me from this channel, I have extensively covered how home prices are substantially down when we compare it to obviously peak of the market in 2022, but even really the peak of market in 2023, namely April, May, even in some cases June and July. Home prices are down from those months. I'm just purely talking about in the most recent couple of weeks to 2 months. Now, why is this happening? Why is inventory increasing substantially, and why are sales plummeting? I mean, plummeting might be A little bit of a harsh way of putting it, but definitely declining. Well, first and foremost, seasonally speaking, from August and really the summer month, fall season inventory picks up. There's no question about that, right? Fall season inventory picks up and it kind of dies down towards the winter. The lowest inventory months tend to be, and sale months as well, I would say, tend to be maybe December sometimes, or January, November as well. Part of this is seasonal, but the 44% part is not what is seasonal. I mean, September of last year, right? I mean, September of last year, inventory once again was 44% less. It's very difficult for me to say why 16,000 people decided to list their property on the market for sale. There's no question about it that most people who are feeling the pressure of these interest rates are the investors who are going on market. I'm getting a call from a lot of people who are investors who are looking to go on market because they bought with variable and they bought when rates were very low. In terms of the end user portions, the end users I'm personally working with tend to be the older, more retired people, or the downsizers. In fact, for most downsizers, most of my clientele, it doesn't really matter when they're selling. Of course, prices are down right now. However, you have to think about the fact that once again, my clients that I'm working with on the listing side have purchased anywhere from the late 80s to the late 90s, right? So to them, they have so much equity buildup anyways. And if it's time to cash out, it's time to cash out. But so that's why inventory listings have increased, but sales have declined, right? That should also tell us something very key as well. The other half of the equation. People are feeling enough pressure. Once again, not everyone has their motivations to sell. There are a lot of people who feel no pressure. They're just listing because they want to move to a different city or relocate for a job or getting divorced, right? So obviously there are those people who are listing and have zero motivations to do with what's happening in the market. But speaking for those people who are actually putting their property on the market for sale due to the pressures of the economy and higher interest rates, well, they're not selling it though, right? Because sales are down, as we discussed. And this is once again illustrated when we take a look at another category, active inventory. Active inventory right now, as of September, was around 18,900. That in of itself represented a 39% increase year over year. So new listings were up 44%, active listings are up 39%. So those people who are feeling the pressure, they are listing, but they're not selling. And it's because for some people, it's a matter of dollar and cents. I cannot take that big of a loss. I might be able to break even or look for a small profit. If I don't get that, then I'm not selling. For others, they have unrealistic expectations. They have the numbers of 2022 in their mind, or even early 2023. Look, a lot of comps right now, if you are working with a professional real estate agent as a buyer, if they're using comps, even if they are using comps, a lot of agents don't even use comps to justify what the advice they give to their clients in terms of putting down offers. But if they are using comps, the comps for a given unit, for instance, you're interested in a given building in May and April of 2023 are simply not comparable to what is currently on the market right now. You have to make the proper adjustments because prices, as I've said, have fallen since April and May of 2023 when the market was at its peak. Obviously, the same thing applies even to a higher degree to 2022 when the market was at its all-time peak, namely February and March. So there's a sense of confusion happening. There's a sense of buyers right now are expecting 2025 prices and sellers expecting 2022 prices, in some instances, early 2023 prices, and people are just not meeting in the middle. Now, of course, once again, there are sales and transactions happening. Me personally, I'm proud to say I sold 2 listings in September and I purchased 1 unit in September. So sales and transactions are still happening. It's just right now the Toronto real estate market is barely holding water. And truly speaking, the buyers are the asset right now, right? The buyers are the ones who have the leverage. It is still, in my opinion, despite the fact that prices have held water, still a buyer-friendly market. Assuming you're pre-approved, assuming it's a wise financial decision for you. For most end users, you want to, finally purchase a property in a neighborhood you like. You have the leverage because the demand is far less than the supply. And maybe I can touch on that a bit more in future videos. And I'm going to touch on the prices in more detail in terms of breaking it down by geographic location a bit more. So the 416 and 905 in a future video. But unfortunately for now, we are running out of time. So as always, thank you very much for watching. Let me know what you think. Let me know if you have any further questions. As always, my contact information in the description box, the link to my newsletter in the description box. Thank you, stay safe, and stay tuned. See you later.